All right, YouTube friends and family, thank you for coming today to my channel. Today I'm going to talk about, and I've spoken about this many times before, whether it's a 2008 mortgage foreclosure crisis, but today we're going to be talking about COVID-19 and the effects that has on bankruptcy and divorces because we're beginning to see the effects now. I even read today an article that said the business bankruptcies are up 53%. Every single quarter, every single month, it seems to go up higher and higher, and that includes as well consumer bankruptcies. So, what I'm going to focus on today is some of the issues that you might be facing regarding this and what we can do. So, the first thing we need to figure out is what's really happening here? Why is COVID 19 an issue now, 4 years later? Well, simple enough. You got to go back to that time and remember what happened with real estate. Real estate was crazy back then. It was kind of pre 2008, right? That time period, which is prices were going insane. But why did that happen? Well, the interest rates were rock bottom. The government, the feds, in order to kickstart the economy and avoid a recession, dropped the interest rates. What did that do? That created a buying frenzy with homes. There's so many stories, you can look it up. My neighbor went away for 5 days because he didn't want to deal with this. So what did he do? He took off on vacation, came back, he got $80,000 over the asking price. I was playing golf with a buddy of mine, and he was a property appraiser, and he was telling me homes are going up for sale. People are buying it without even checking it out. They're just saying, looks nice, looks like a nice neighborhood. They go through Google Maps, click, make an offer on the home. I had homes in my neighborhood selling. The sign goes up at 10 a.m., and by 12 p.m., the realtor is coming back saying sales pending. That's insane. Think about this. This is a house. This is not a t-shirt that you're buying on Amazon. And yet people were dumping hundreds of thousands of dollars just like that with a click to buy a home. But that creates the buying frenzy. You have a buying frenzy. What happens? Prices go up on real estate. Prices became kind of unaffordable. But the interest rates kind of compensated for that. So if you look at an example, here's a simple one. If you have a mortgage of $300,000, right, at 2.72% like it was more or less during that time, the interest rates were basically zero. This is the bank, going up a couple of points just to make their profit. Your mortgage is $1,220. I was paying $1,500 rent at the time. Think about that. That's a great time to go out and buy, right? You're thinking interest rates are low. It's going to be actually cheaper to own a home than it is to rent. So that's what created this insanity of the market. Here's where it gets complicated. Now you fast forward a few years, and what comes into play? Divorce. So when divorce comes into play, now we have to figure out what are we going to do with the house. Now here's some quick math. If you're buying the same house today at the same price, which is not even going to happen, but let's just assume it is, and we're talking about basically what the interest rates are today, 7%. That same mortgage is $2,000. Look at the difference here. All of a sudden you went from I can afford this house to I can't afford this house. So if you're going through divorce and it's a dual income home, what do we do now with one person? Can't afford that. You can't afford that. Even yesterday, my wife was offered a good job out of state in Atlanta, actually. And I said, now's not the time for us to turn around and buy another property and sell. We'll make some money off the sale, but the interest rates in that general area are going to kill us, assuming I can even qualify for a mortgage, because it's kind of that much more difficult to qualify for a mortgage these days, especially when we're talking at 7%. Everything better be perfect. And that's what the banks are focusing on right now. Is your credit perfect? Is your income perfect? I'm basically self employed. This makes it an issue when you're applying always for a mortgage. But you can see how post COVID, all of a sudden the interest rates go up. Maybe you can't afford to buy a home. You could, right? You could buy a home. What are you looking to pay? The same amount, 1220? Well, look at the math that I did here. To have the same mortgage at 1220 per month, you got to buy a home that's worth 182,000. Before the home was worth 300,000. So what does that do to you? For one, it could change the neighborhood that you're at. It might even require you to drive even further. The further you are away from work, the more you got to travel. The more you got to travel, the more that you're stuck in traffic. You see the snowball effect that's taking place here, all just because the interest rates changed a little bit. So that's the crazy part about interest rates and when to buy. You got to buy, obviously, when the time is right. Right now, times aren't so good. But if you're going through divorce, what are your options? Well, Let's look at that. You have the option of selling a house, right? Which is typically what's going to happen. You can't afford that $2,000 mortgage anymore. When it was 1220, it was no big deal. You're even traveling, having a good time, maybe even bought a car, paid off some debt, but things have changed post COVID. These are the effects we're feeling. This is why more businesses are filing for bankruptcy, and this is why consumer bankruptcy cases are up as well. It's the hangover effect. There's nothing we can do about that. But here's an issue that I want everybody to know about and to focus on. Cashing out is simple, right? We sell the house, we split the money, we're done, there's nothing else to do. But what about, well, I don't like this 7% thing, so maybe we can hold off. Maybe the house will go up in value, even though some areas are being hit hard and property values are dropping. What are you going to do now in that situation? Well, here's the issue. If you're going to do a we'll sell the property later type scenario, what happens if you're both on the mortgage because the other party can't afford to refinance with these interest rates up? If those payments are late, it's going to affect your credit too if you're on the mortgage. And also, if that house goes into foreclosure, it's going to affect you too, and you're going to end up getting sued, and you might have to end up filing for bankruptcy. From a practical standpoint, let's just say none of this is an issue. Payments are timely every single time. You're now applying for a mortgage on a second home. I know it's not a second home, but that's the way the bank looks at it. The bank looks at it, how do we protect our investment? If you got a property over there and now you're asking for a property over here. We got to protect our investments. If a lawsuit comes in foreclosure, they can put a lien on that property. It gets complicated. So remember, you're now applying basically for a second home. Again, I know it doesn't look that way from a practical standpoint. Your answer is not a second home. That's my ex-spouse's house. She's the one living there making payments. You can explain that to the bank, but the bank might feel a little jittery of giving you money on a second home, another mortgage, and everything else. So keep that in mind because it may affect not only your credit score, it may affect if the payments are late, but it could also affect you qualifying, not just a mortgage, it could affect you applying for qualifying for a car. Now, here's the other issue I wanted to focus on, and it's this part right here. You get divorced and you say, I'm done. I submitted a quit claim deed. I signed it at the lawyer's office. That house is not my problem. That house is still your problem. The problem with the quit claim deed is all you did was transfer your interest. You didn't transfer the mortgage obligation. You can't do that. That's a contract that you signed with the bank. Just because you signed a piece of paper that says I give everything to this person, you're still on the hook for the bank for the full amount. So understand that when you do a quit claim deed, the mortgage obligation does not change. That is still your responsibility. The only difference is now you have no interest in the home, but you owe the full amount on the mortgage. Think about that. The house is not mine, but the mortgage is. Probably not the deal you were looking for. Now, I will say because this question happens all the time. They want me to sign a quick claim deed, etc. Yeah, but if the other spouse is buying out the other one, sure, that's normal. You sign it at the day of the closing. That way, you know there's no issues. You sign a quick claim deed. You walk out the door 5 seconds later with the funds being transferred to your account, and you're done. But I wouldn't recommend signing a quick claim deed so far out in advance because you never know what's going to happen. So avoid that. Do it the day of the closing if possible, the day before, whatever, just to not have any issues. All right. So if you have any questions about today's blog, feel free to put a comment down in the section down below and I'll reply to you. And of course, if you like what you see, feel free to subscribe. Now, if you're a reader and you've been checking out my blog and you have any questions, likewise, you can send me a question and I'll post my response in a blog format. And I'll even make a video about it. Don't worry about privacy. Your privacy is protected. I won't release any information that reveals your identity. All right. So I'm done for today. Take care, everyone. I'm out the door myself, but I'll be back later. If you want to find me on social media, like always, feel free to respond to me and say hello. Drop by, say hello, and wish me a good weekend, just like I'm wishing you a good weekend as well. Take care, everybody, and I will see you at the next video. Bye bye.